Hello, and welcome to today's AAIS webinar. I'm John Caduce, Vice President of Products at AAIS. Today, we will be presenting Driverscape 2024, Opportunities in UBI Auto Insurance. This annual research report helps us refresh the market structure, segments, and trends over the years. I'm joined by my colleague, AAIS Auto Product Manager, Ash Naik, who will discuss the segments, identify challenges and opportunities that can help you to navigate the auto insurance market. And now I'll pass it to you, Ash.
Thank you, John. Thank you for the introduction, and thank you to all who are in attendance today. First, some housekeeping. We want this to be an engaging conversation, so please don't hesitate to submit questions as they come up throughout the presentation. You can use the Q&A box at the bottom of your screen, and I will try to get to your questions as we move along. And in case I don't get to it at that time, we have some time at the end for live Q&A. And if I cannot get to that at that point, we'll probably follow up with you on that one. A very quick overview for most folks here. If you have not come to the similar webinar in the last couple of years, Driverscape is the annual AAIS consumer research study report that we bring for auto insurance carriers. Now, we take a look at drivers in the US and to understand their attitudes, perceptions, and needs to help define the challenges and opportunities for you. And the focus is on telematics technology. So when we hear carriers or a lot of news articles tell us that the evolving technologies, privacies are the concern, we go deeper and say what exactly about privacy is a problem and what can you do about it. So we want to make sure that you, professionals in the carriers can make strategic decisions and employ winning tactics in the usage-based market. So with that, let me just go on to the next slide and keep going on. So what does this research study evaluate? We look at the personal auto insurance market, and we just look at drivers who are buying or plan to buy insurance. Now, we have heard time and time again that driver data privacy, security, and quality of the data collected is a problem. This seems to be a challenge, and what we want to do is look at the driver's attitudes and see what effect transparent communication has on their ability or their willingness to switch to a UBI program. We also want to look at data protection measures that can reassure drivers into sharing more of their information. We look at the clarity of policies on data usage and ownership, and we look at driver rights and more aspects of what you can and cannot do that will influence the driver decision and adoption. Now, we also look at who's accepting and who's rejecting the telematics-driven insurance. And we will also look year over year how different segments have changed. Now, we want to make sure that we give you a better description of opportunities so that you can compete in this market, which is kind of evolving as we go along. So what are the dimensions of driver's attitude, right? I kind of briefly touched upon it. We are building on top of what GDPR put together, the principles of data handling for data stewards. And the summary of attitudes focuses on these dimensions to see changing which of these aspects increases or decreases their chances of adopting usage-based insurance. Now, telematic data, like any other digital data, is owned and used for various purposes. But we asked consumers for what would change the likelihood of purchase. They had to rank which of these pillars would influence them more. And this gave us the granularity that helps us identify these opportunities. Now, we have a whole lot of members who kind of are looking at the auto insurance market. We want to make sure that we not only are able to deliver a differentiated and competitive product in this growing marketplace, but also as an industry, leverage all the innovation that is coming coming up and build on top of it. So that's pretty much where we kind of like started off. Who are the respondents? Every survey typically starts with, well, who are you talking to? We had over 700 completed responses across the entire spectrum of household incomes. And I think I told you this, but we only looked at drivers. One of the filtering criteria was, are you a driver? Yes or no. If you said no, you are out. You did not. That was not collected. The respondents were random representation across the market. So it's a random digital sample that was done in an online survey. The income distribution, as you can see here, mimicked the US population and spread across the geographic US. So we kept it limited to US. We did not go outside of it. We tried to keep the population as close to as close to the age of as close to the demographic that we kind of like are interested in. Now, to that end, we had to change the way in which we selected the drivers, and we did not add any filters. We just wanted to know where exactly the population lies in terms of age bands. So below 24 was one of the smallest respondent cohorts. Then we had some of the highest participation in the 25 to 55 age group. So over a vast spectrum of respondents were kind of like experienced drivers, at least based on the way that they kind of like are responding to in the surveys. In terms of gender split, this was not forced, it just happens to be that way, but fewer males responded to the survey than females, and that's just the way it came up. We did not ask this question. This is a data that is provided by SurveyMonkey, and we just take it at face value. Now, we targeted a 90% confidence level in any results that any insights that come up here, with the maximum of 8% margin of error. So just to keep the survey within budget and keeping it in time, we had to kind of like make some trade-offs. We could not get a very good sample. Some of the aspects where we got a very good response rate, the margin of error is smaller, but it does not exceed 8%. And that's where we'll kind of like stop and say where we stand there. So now that we talked a little bit about the survey and what we got out of it, how does a market look like? The traditional market has dropped below 60% for the first time. And that brings up that the respondent that say that they have a usage-based insurance has gone up, has crossed 40% mark for the first time. Is that good or bad? I'll leave it up to you guys to kind of like make a determination. But we can only see the traditional consumers shrinking and the usage-based telematics-powered consumers growing as we go along. Now, how did this compare to last year? Between 22 and 23, we saw an 18% increase in the telematic usage. But the increase in the telematic population was not that big in 24. It just grew up by 5%. Now, this is a very broad question. We can see that with a higher confidence, higher degree of confidence than like than 8%. So I think this is consistent with all the other studies that are coming around. And we'll talk a little bit more about who qualifies or who quantifies, who identifies themselves as using telematics and why they think about it that way. I would kind of like want to just spend some more time on this. Moving forward, how do we see this market evolving? The increases will be small. The adoption is going to go to a harder to win audience, and at some point it'll become harder to grow from a traditional point, and at some point which we kind of like have to make a determination of whether this kind of a year-over comparison makes sense or not. So that's the overall market structure. The second piece was like, well, how are the traditional market and telematics-based market different? If you look at genders, we pretty much are very similar. Now, we are not really sure whether it is the bias that came from the survey respondents or just the general way in which the market is evolving, but we can't really make much difference, except that there might be a lot more bias towards traditional non-telematics-based auto insurance for women than for men. But we are not sure. That's something that you guys probably know a lot better at, just based on your segmentation. Carriers will have a hard time segmenting the market on gender, and that's very standard. And this kind of like signals that there might be something here, but not very clear indicator of where things lie. The next piece was, how do their demographic, what are the age brackets in which the traditional versus UBI markets differ? You can see in this chart that the respondents in the traditional market pretty much mirrored the market distribution. There is an unusual skew in the older demographics. So 55 plus, traditional insurance seems to be a lot higher than usage based. So it's something that you guys want to kind of like keep an eye on as you figure out how your segments look compared to where you stand. The UPI market is also skewed more towards the middle group, so between 25 and 55. There is a clear preference for UBI, and the adoption seems to be low when you look at the older age groups, especially for usage-based, telematics-based auto insurance. Once we know the structure and how those two different markets differ, we want to spend some time looking only at the usage-based insurance. We kind of like looked very quickly about where they are similar, how they have evolved. But what does the usage-based insurance look like today? Now, the survey was designed so that when respondents chose that they are already using usage-based, they found a different path, and they had to answer a smaller set of questions on how their experience with the usage-based insurance work. So that is pretty much what we will be focusing on first. Then we will go into the traditional market, which is a bigger opportunity for most carriers to win in the marketplace. Now, if we look at the UBI modalities, we started with OBDI, or onboard diagnostic interface devices that would plug into cars. Now, that was some time back. Then we had mobile apps that interfaced with OBDI apps at some point. Then we had a complete mobile-based systems. Then we had connected cars, and then we have non-ongoing tracking, or at the time of quote kind of a mechanics. Now, when we asked respondents which device or what is the modality that they use for the usage base, a majority was mobile only. So the OBDI port seems to be going away. OBDI plus mobile seems to be smaller. Connected car seems to be growing, and it's a pretty large part of the market. But it is surprising to know that the no ongoing tracking seems to be a small sliver, which we expect to keep growing over a period of time. Now, this is a segment that is worth watching, and I think we'll just talk a little bit about what that means. Taking a look at year-over change, how did the modalities system evolve? So mobile only we see is very similar to what we'd seen in the last year. We did not ask this question before 23, so we do not have the data to kind of like go one way or the other. For OBDI only, there's a slight drop between the 2 years. So very few people want to or prefer using an OBDI port that actually doesn't give you any information. OBDI plus mobile also seems to be going down. The connected car is a much bigger slice now. We see almost a doubling of usage-based insurance based on connected car. And of course, the no ongoing tracking is a new question. We did not ask it last year, so we do not know exactly how that has evolved. That's something that we'll kind of like take a look at it. Now, after we'll take a look at usage-based insurance, we kind of like have to look at the traditional market, right? This is the 60% of respondents that is the prime target for all carriers looking to grow your usage-based or telematics-based share. Or if you do not want to go that route, how do you defend that market against usage-based insurance that seems to be growing? Now, we have segmented the traditional market into a set of acceptors. So these folks have rated rated 5 on a 5-point scale. Their willingness to use or adapt telematics-based usage-based insurance. So if they said 5, that's who gets counted as an acceptor. Now, folks that have indicated that it's either a 3 or a 4 get counted as undecided. Folks that are in the middle of the spectrum that are not totally opposed to usage-based insurance. And the bottom 2 scores of the folks that indicated 1 or 2 stars on the willingness to go to adopt usage-based are kind of like slotted as the detractors in our segmentation. Acceptors are the first prime audience that you can kind of like start convincing because they are much more accepting of where they would go just at a broader level. The detractors, the detractors are probably not ready for engagement just yet, so they probably need a lot more time. So we kind of like can keep them further away. Even though that market is shrinking, they still have like a voice, and they still have like some kind of like a presence in the market. The majority of the market lies in the middle, where they are open to conviction, and that is probably where we see the biggest opportunity for most carriers. Now, remember, this is the first level of segmentation. You can probably do your own segments much better at a much more granular level, and we leave that up to you. But we just wanted to make sure that we gave some broad guidelines on where the market is and how the respondents identify of their willingness to adopt a usage-based program for auto insurance. Now, how do these segments stack up year over year? Between 22 and 23, we saw a big jump. It probably is a leftover from the COVID to post-COVID era, but there's a lot more openness to sharing and adopting new technologies. The undecideds again had a big jump, and the detractors fell significantly in that year. But then the segments seem to be staying pretty flat in the last year. There isn't much noticeable change, and we expect that to last for a while unless there is some technological breakthrough that kind of like pushes the boundaries of these segments. So we kind of like laid down these 3 segments. We want to go very into specifics about each of these segments. So first I'll go talk about acceptors, then we will talk about undecided, then we'll talk about detractors, right? So we use those 6 dimensions that we talked about to try to figure out what are the biggest opportunities that we can kind of like leverage. So based on the acceptors responses to the elements that would make them more likely to adopt a usage-based program, the 3 that stood out was leading with the commitment to driver privacy. So as a carrier, if we are able to convince these acceptors, this segment, that driving data is private and it is maintained that way, and it will not be used for any other purposes except for grading, that seems to be the biggest challenge that we have to address as an industry. The second piece is you have to demonstrate that the ability of drivers to access the data. Drivers need to access and ascertain their driving information and validate it up to some point. Now, the level with which they can manipulate it, or the level of visibility, is a question that we probably need to look at in the future time. But that came out as the second big piece that we kind of like have to address as an industry. The third biggest driver of adoption was going to be the assurance that the telematic data is fair to the driver. And once these top three concerns are addressed, the acceptors are more likely to switch to usage-based insurance than not. So these are the big things that were indicated, at least in the way that the respondents responded to the questions of like, what will make you switch? And you have to rank the different pieces that were provided. Now, the second thing that we asked them was like, well, what is going to be a challenge? And you have to rank the dimensions that are going to be preventing adoption of usage-based. And the first one that came up was the telematics data clarity. So respondents have indicated that they saw challenges in the way in which telematic data is captured, and they are not sure they understand what is being used for their rating purposes, for their the driver grading purposes. So that seems to be the number one challenge, stopping them from adopting usage-based insurance. The next dimension was data transparency. The respondents indicated that they need better transparency on their carriers on the telematics data that is captured for the purposes of usage-based insurance. And the third dimension was fairness, very similar to the one that we saw in the biggest opportunity there. Now, just because we have 6 dimensions and users are rating them, there has got to be some overlap, and this clearly is one of them that comes out both as an opportunity and as a challenge for this particular segment. Now, how does this segment look like in terms of demographics, right? The largest set of acceptors are between the 25 to 34 year age group, followed by the 34 to 44 years age group. So the bands are skewed a little differently, and as we go through these 3 segments, you'll see that the demographics look a lot different. Based on the responses that we were able to collect, we could not look at we cannot provide any gender differences between the 3, which is why we do not show any of them. But we have enough numbers to kind of like indicate where this small segment looks like. And it's pretty much in the lower, like the middle to lower end of the age band that we have kind of like taken a look at. That doesn't mean that there aren't any acceptors in the higher age band. As you can see, there are quite a few, but the 65 plus, like even the 65 plus age group seems to be bigger than the under 25 age group, which is surprising, but that's just the way this response, the respondents have indicated for this particular segment. The next part was about undecided, right? Similar to what we talked about for acceptors, this segment has grown year over year. Typically winning this segment is going to be a harder and a longer sell, but it's not going to be as long as the third segment that we'll be talking about. But the top reason that this segment indicated they would be willing to switch is, again, carriers' commitment to maintaining driver privacy. So as long as you're able to convince this audience that, yeah, their privacy is maintained, they have indicated that they are more likely to switch to UBI than not. They also have indicated the second biggest thing that they have indicated is access to their driving data, very similar to the next two are very similar to the other segment as well, where access and validation of driving data as well as the fair use of UBI are kind of like the causes that will kind of like lead to switch to UBI. This segment, again, if you ask them the next question of like, well, what are the challenges? What do we need to overcome? Oops. What challenge does the carrier need to overcome? They indicated that, again, the carriers need to be more clear about the data that is captured. Respondents have indicated that they see challenges in the clarity of what is collected and what is captured and how it is used. So just going from clarity of like what is collected to transparency of how it is used, and then finally coming back to the data access control kind of like should be a good segue into winning this market. Now, if you look at the demographics, how does this segment look different from the acceptors? You can quickly notice that the 45 to 55 seems to be the biggest chunk here, followed by the 55 to 65 age group and the 25 to 34 age group. So there is a small band which I think largely convinced, but they still exist, and the younger and the older folks seem to be kind of like following behind, or a much smaller audience. So when you are building strategies or when you're building outreach programs and you want to go after the undecided, you want to take a look at like this as a starting point and build on top of that. Now, let's look at the final segment, right? This is the segment that has the longest sales cycle. They are the ones that are most vocal and get quoted most when we look at all the research that comes out. This segment has been shrinking and is probably going to be a holdout for a very long time. And the segment is kind of like talking about the same things that we generally associate with the usage-based insurance, right? If their privacy issues are addressed, they are more likely to switch. The telematic data use is fair, they are more likely to use. If the carrier is transparent about the data that is captured, they are more likely to switch. This is a consistent response that we hear from this segment, I think, which mimics exactly where they lie. And on the dimension of what prevents them from adopting UBI, the top dimension is telematic data clarity. They're not sure about what data is captured and how that data will be used. So both of those top factors go hand in hand, one after another. And then the third dimension was, again, driver access control. So just the way in which we kind of like have approached these three segments, you can see that they are similar and different in the same sense. If you look at the demographics, this is skewed more towards the higher end of the spectrum. So 65 plus age band seem to be making up a larger percentage compared to the other ones. So you kind of like know where you kind of like have to focus in terms of age bands to go after or exclude this market if you so choose. I just want to make sure that I'm not losing any questions. I just saw something come up in the Q&A part. The question is, could you address data breaches and their impact? This is a great question. I think it is something that we did not take a look at for this particular survey, but I will make sure that we capture that as one of the elements to look after when we go after for the next iteration of this survey. The second question is, can non-intrusive telematics help us get past consumer fears about data tracking? The answer is absolutely, according to what the data seems to be indicating, right? Driver privacy pretty much lies in the sphere of, will somebody know where I was? And as long as you are able to convince the driver saying that, no, we do not track that kind of an information, we are pretty much, we address the concerns of the top two segments that are most likely to switch. So you will definitely have an advantage when you go after those two segments. So with that said, I think it comes to the right question, right? Who owns the data, and what impact does, what is the preference for the drivers when it comes to data ownership? It's not a surprise when drivers say that they would prefer to own their telematics data. That basically means that it puts the carriers as stewards of data. And if we are able to, we as an industry are able to own up to it and say, yes, we don't own the data, you do as a driver, and we are just stewards maintaining the telematic data for risk assessment, for giving you the best rate that you kind of like need, just for making sure that the right risks are charged the way they should be, and you get rewarded for all the good behaviors and all the good stuff that you do. The likelihood of us winning in this world of telematics increases significantly. The second segment, which is very surprising, is like drivers would prefer carrier to own the data as opposed to third-party vendors. And the third-party vendors includes car manufacturers. They do not trust car manufacturers with their telematics data as much as they do the insurance carriers. It was very surprising for me to see this one, but that's what the respondents indicated in the way they have ranked where they would like their data to reside. And again, the final thing would be other, which basically was a place to capture where they think the data should reside. And I did not get any specifics about where they would like it to be. So I cannot put that 5% in a certain slot that we can act upon at this point. We'll kind of like look at it in a deeper way. So the key takeaway from this is we want to make sure that the drivers understand, or at least know, of the way in which the ownership of data works, and carriers kind of like showcase their stewardship of the telematics data. So very simple thing that we kind of like walked through. Now, after just going through the base thing that we have done like year over year, we wanted to spend some more time on EVs. So for the first time, we are introducing an EV supplement. EVs get a lot of market attention. There are a whole lot of articles written about EVs and everything that goes wrong and everything that goes right, and some things that are fantastic and too incredible to believe. What we wanted to know was like the segment of the drivers who drive EVs. What are they looking at? Are the risk dynamics different? And what is important to them? Is there any noticeable difference between EV owners and internal combustion engine drivers? So just trying to take a look at that and trying to contrast the market between the two was the original goal of this research. And we came away with quite a few surprising finds, which have given us enough material to look at this this dichotomy in a different way moving forward. So what did we find out, right? It starts with the current ownership. We wanted to take a look at is the respondent pool representative of the market. Internal combustion engines still dominate the streets, and that's how the respondents came up. EVs come in about 5% of the respondents. That is as expected. That is what we were we were expecting. Hybrids are growing, and they are well over 11%. So that is a surprising thing that we kind of like notice. And with plug-in hybrids and electric vehicles combined together, we kind of like can look at them as a separate segment moving forward. But right now, we keep them in the same place as we go along. I see a couple of questions pop up, so let me just pause here and see if I can take a look at the responses. So I think there was a comment here that says data ownership by consumers is an important emerging issue in general with social media as well. What are the real mechanisms or prospects by which this can be accomplished with usage-based insurance? So I'm not really sure or I address this, but it is more about policies, procedures, and the rights that we accord to the data that is being collected. Data ownership is less about who actually keeps it and more about how it is perceived. And that's a discussion that is much broader, and it's not related, it's not specific only to the insurance sector. But if you can reach out to me, and I'll be giving you the contact information later on, we can have a deeper discussion and perhaps use that as a question for further research moving forward. Second question is, what are the timing of this survey in comparison to the negative press coming out earlier this year about telematic data exchange and OEM sharing this data with insurers? I think the survey responses were collected in between February and March. So this was slightly before the negative press. So the influence of press is probably not very clear in this report. We can have a separate conversation about that and what that means, and we probably will have a refresh of that of the survey at a later point as well. Then we have two other questions. In the connected car space, what is the data sharing arrangement between car manufacturers and major insurance carriers? Do carriers have to buy it if made available? That is a separate conversation. I don't think we can have that in terms of the data that we've been collected from the drivers, but a very good question to explore when we look at driver preferences. And the second question was, are OEMs willing to share event data recorder events in the context of accident reconstruction and forensics? I see that we probably should set up another supplement on where the data is coming from and where we need to go. So very good questions. We will kind of like follow up on that at a later time. What about the issues of who is liable for incidents involving self-driving vehicles? A question that we did not ask, but we should be looking at the next survey refresh that goes out. What strategies can be used to increase adoption among traditional insurance customers? I would highly recommend us not look at the traditional insurance customers as like one big block. There are three separate segments, and as you're going after one segment, you want to segment it. At least if you, let's say, for example, you look after adopters, you probably want to look at the age bands that are most likely and focus your attempts there. So use this as a first starting point, but build on top of it and further segment so that you're able to address issues that are important to that particular segment and not try to solve for everyone and kind of like get stuck in this, in a generic conversation. So I think I'll just continue with the presentation. Keep the questions coming. I will have a bookmark here on where I stopped, so I can keep on going from that point on, and we'll go there. The next part was like, how many of the EV owners currently indicate that they have usage base? Now, this is a very different market compared to the overall market, right? In the overall market, 40% indicated that they had usage base. But for EV owners, the number is 68%. Very large percent of the population seems to be using usage-based. Now, technologically advanced cars make it easier and seamless and hopefully much more prone, or I would say biased towards adoption. But that's the way the responses have kind of like indicated. The second piece was going to be like, well, how do EV owners differ from the traditional market or the overall market? EV owners tend to be in the middle age bands. As you can see here, the overall market is spread across all age bands, but the EV owners are kind of like skewed in the middle section, with the 45 to 54-year-olds dominating the ownership of EVs unusually compared to the overall market. So this is like a very interesting piece that I kind of like saw. Even though it is a smaller segment of the overall market, they kind of like fall like in a very small band of users. The 25 to 44 kind of like mimic very similar to where the overall market lies. But you can see that there is a very big difference between EV owners and non-EV and the overall market, not just non-EV owners. So the orange bars here do not indicate the non-EV owners, they are the overall market. So just so that we can compare both of these demographic. As far as the insurance is concerned, we want to know a lot more about the risks, right? And based on all the press that we have about fires and thermal runaway effects and chargers blowing up, I thought it would be a good idea to ask this question. So we asked the question of like, well, where do you charge EVs? And the number one place is at home. Now, since a majority of EVs are charged at home, the charger that is installed in a home is very, very important, especially because there is a wide range of products available in the market. There's some cheap ones that you can get for a couple of $100s on Amazon, to a very expensive, professionally installed kit that would cost you a couple of $1,000s. And then there's the wiring of the house that kind of like comes into play here as well. Now, these two ends of the spectrum are very, very different in terms of risk profile. We expect the impact to be larger on home insurance than auto, because based on the research and based on the findings that we kind of like touched on in our product summit, the in-home or in-garage fires are disproportionately high for internal combustion vehicles than EVs. So there might be more study and more research required to try to figure out what the impact is going to be. But the second piece is, do people charge at work or external point? The answer is very little. And when the EV owners charge in a public charger, it is mostly for fast charging. Even though there is a severe battery impact for fast charging, it kind of like makes sense, because if you're driving somewhere and you're on a trip that is a slightly longer range, you want to kind of like make sure that you get charged very quickly and move on, and not get bogged down by the time required to keep the charges going. Now, how do EV owners differ in terms of income bands? We kind of like talked a little bit about like, well, how does the household income spectrum look like for the overall market? And it follows a very similar path to the demographics in the US. What is very interesting here is 82% of EV owners are between 50 and 175,000 in annual income, in household income. And the more interesting part is over 60% of EV owners make over 100K in their household income as well. Now, this market is twice the size of the overall respondents market. So it gives you an idea of where and how you can focus your resources to reach out to the right segments or the sub-segments within your market. So those are the big pieces that I kind of like wanted to touch base on. And the important thing that we found based on the responses is EV owners are more likely to be different from the overall market. But how does that mean? How does that translate, right? They have indicated that their next vehicle to be EVs more than, as a number one choice, more than the overall market, right? So 13% of the overall market has indicated that their next vehicle will be an EV, whereas 52%, or at least half of the EV owners, have said that their next vehicle will be EVs. So if you get them in for one car, you are more likely to get them in for multiple cars. EV owners are just under twice as likely to get usage-based. We kind of like talked about that in just a bit. EV owners are more likely to be satisfied with their UBI carrier than the overall market. So we asked the question, how satisfied are you with your UBI carrier? And EV owners predominantly came in twice as much satisfied, like 1.2 as much satisfied as the overall market. EV owners are more happy about the premium discounts that they get, and overall they are much better off than the overall market. So I just wanted to like spend some time just re-emphasizing that whenever you build or think about UBI programs, EV owners are a very lucrative market, and we will keep a bigger, like a sharper eye on this small segment as we expect it to grow over the course of the next few years, and this will give us a good way of taking a look at the opportunity there. Now I see a whole lot of questions coming up, so thank you so much for listening to the presentation. And as I go through the questions that have come up in the Q&A box, I would encourage you to keep on adding to them so that we can go to them one-on-one. So there's quite a few that have come up as we have progressed since we started having this. One of the questions here is, how do we balance accurate risk assessment with consumer worries about automated decisions in usage-based insurance? Automated decisions does not seem to be the way our industry is going. There is always a human in the loop based on the way all the conversations that I have at least been involved have been going. So I think there is a lot of noise in press about the way in which the accuracy versus automation seems to be coming up, but it is something that we definitely need to keep an eye as an industry to address. This is a question that I would love to explore a little further in our next iteration of the survey. So stay tuned. I'll keep a look at what makes more sense in the future. The next question is, how do we address the concerns of the segments of consumers who are strongly against usage-based insurance? They are going to be a long sell. I would personally not go against try to win them over with usage-based products at this point. That said, we as an industry seem to need to do a lot more work to win them over. So it's not just a segment-related issue, but more of a larger industry-wide issue. The next question is, with EV owners being more likely to choose UBI, how should we adjust our offerings for them? I'm not really sure that we would like to adjust our offerings any differently than what we do. I could be convinced in a different way on this topic, but just in terms of targeting and responding or going after this audience, it just seems to be a lot more lucrative. So I'd be happy to have a bigger, deeper discussion on how best we as an industry can can evaluate and work with the EV owners. How can we tap into a younger tech-savvy crowd to boost UBI adoption? Now, it seems the respondents in this survey seem to indicate that the younger tech-savvy drivers don't seem to be, one, not responding to surveys as much as the older folks did, and two, we know very little about them because they have kind of like not given much indication about where they lie. Now, they are definitely a major spectrum of them definitely fall under the acceptors segment. So we just have to capitalize their willingness to share information without concerns. I don't think privacy is a big deal for them. They are used to being very open about data and very comfortable sharing information about themselves. On an anecdotal basis, we had a conversation with a few younger folks who use programs such as Life 360 or others where they share information with each other. And my question to them was like, do you know what this data is being used for? And do you care? And the answer was, no, we don't care. It works for us. It helps. We know that they will be using data for something. We'll figure it out when that hits us. But right now, it helps us with what we need to do. So we'll continue using it. So that's the attitude that makes this audience slightly better suited for winning over. What is the best way to win over undecided consumers who are on the fence about switching to usage base? I think we talked about like very specifics about what this segment is looking for. One is look at the age bands where they are in a majority, and then address their number one concern, which is privacy. As long as we are able to say, well, your data is private, there is a way in which the scores are calculated, and here's how it will be used. So you are very clear and transparent about how that information is used and not for something else. You are more likely to win this segment over. We cannot say very definitively that one works versus the other because it was a ranking question. And as long as we go with the top three pieces of concerns that would be most likely to sway them over to UBI, you're most likely to win them over. The next question is, will the recording of this talk and slide be made available at a later date? Absolutely. We will make sure that you get access to this information. And there's one more comment that says, great presentation. Thank you so much. The survey results are very interesting and informative. Absolutely. We will be not only sharing the slide, but also a report that documents quite a few of the information that we walked through today. So I think that is all we have for the questions that are in there, that are coming in. So just as we are coming towards the end of this webinar, I want to make sure that I thank everyone here for joining us here today. Thank you for all the questions and the comments, as well as the encouragement to on this topic. That's all the time that we have today, and we want to make sure that if you missed any of the discussions, you will be able to watch a replay from our on-demand library and on the AAIS YouTube channel in the coming weeks. We will also send up a follow-up email with our contact information as well as a link to the video recording. If you need to contact me or one of our engagement managers on any questions, or if you need any information that was not covered in this topic, in this presentation, but is available in the responses in the report that came out from the survey, we would be happy to share them with you. So please enjoy the rest of the afternoon, and thank you again for making time today. That's all I've got to say here.